Okay, so this part of the class is how to set up, establish, and maintain your finances. As you can see with the handout, we're going to go in line with that. First thing I just wanted to give you guys was a little checklist of items to get accomplished. So the first video, we went over how to file your PLLC. The second video is how to apply with your EIN from the IRS. And then when you're done with that, you're going to need to fill out a new W-9 with the brokerage. Because the commission checks are no longer going to be paid to you. They're now going to be paid to your PLLC. Okay? So all the more reason, once you get this set up, to quickly go get your bank account established. Because if you don't, you're going to have a hard time cashing a check made out to a PLLC. Got it? All right. Then when that's done, you'll need to do a new application with the Department of Real Estate. If you need any support with that, you can also get with Lori or contact the Department of Real Estate. So open your business account, and then we're going to start with your your business P&L, profit and loss is what a P&L is. But before we do that, I just want to show you on this checklist. I want to keep everything with as few different files and pieces of paper as possible. If you look at the bottom here, income distribution. So these numbers are going to change for you, and they should as your financial picture changes. This is just something to help give you a start. If you notice, income distribution, personal is only 45%. So if you're currently spending 100% of your checks, we're going to have to do something differently. Because if you're spending 100% because you require that money to live off of, what about running your business so that you can continue to lead generate? What about paying taxes? If you've never had a massive tax bill at the end of a year, like you're not making enough money. That could be true, but it's also you're not spending wisely either, right? So you've got to set aside some money for taxes. So we're going to talk about the percentage and how to figure that. I'm putting 20% up there because when a check comes in and the gross amount is, let's just say 10 grand, right? So if you look at your effective tax bracket, it's probably more than 20%. It's probably 25. But here's the deal. Being self-employed and running an entity, a business, you're not taxed on your gross. You're taxed on your adjusted gross. So again, as we were talking about that other example, if you made $100,000, you paid yourself a salary, and you had business expenses, you're going to be paying your tax bracket on what's left over. So if you're paying, let's say what's left over is 40 grand out of the 100. You'll be paying 25% on the 40 grand, not the 100, right? So what's 25% of 40 grand? That'd be $10,000, yes? Okay, so what is $10,000 of 100,000 that you made? 10%. So when you get your check, you don't need to withhold 25%. And we're going to get into why. You can, and especially if you can afford it, like that's not a bad thing. In addition to that, as you accumulate this money, please, for the love of God, make your quarterly estimated tax payments. If you don't, you'll be penalized by the IRS. You're just paying them more money for unnecessary fees. Don't do that. Now, I would not suggest that you make your quarterly payments in excess of what you think they should be. Your CPA can help you with this. Here's what I mean. If you're paying 25% quarterly and you earned $100,000, 25% of 25 grand, which would be a quarter, right? Quarter of the year is 25,000 that you earned, and 25% of that would be $7,500. $7,500 is 25% of 25,000, right? 6750. 6750. 6750. Okay. So what's 6750 times 12? Or, excuse me, 4. Should come up to 25 grand, right? Yeah. Right. Okay, because you're paying 25% in taxes. So if you pay the IRS 25 grand over the course of the year through quarterly payments, but your tax bill is only 10 grand, How long does it take you to get the additional 15 grand back from the IRS? And did you earn any money off that 15 grand that you overpaid? Then why would you do that? Oh, because the typical person coming into real estate used to have a job and they love getting tax refunds. That is the stupidest thing I've ever heard of. Yeah, like give me the 15 grand, I'll pay you interest on it. Because I can go put that money to work to make money for me. Don't pay more than you have to, but pay your taxes. Got it? Okay, so you can adjust that number as we go along, and I'll show you what to do and how to do that. Savings. So I'm a firm believer that you must pay yourself first. So every single penny you earn, how much of that is going into your own personal account? Here I'm calling it savings. You can call it whatever you want. You can call it savings plus investing, vacation fund, whatever you want, or all the above. But you must pay yourself first. If you earn money, withhold taxes, and spend the rest, like you won't have any money. You have to force yourself to save this. And over time, that's how you acquire that account having 6 figures in it. It's over time, it's progressive. And it'll never happen if you don't get started. So just get started. I don't care if it's 10%, 1%, 50%. Just start. That is the best advice I could give you. Got it? Okay. And then I have debt on here. If you got a lot of debt and you want to start putting some money away towards the debt, cool. But again, if you're going to build wealth, building wealth is acquiring assets that pay you money. You use that money to pay down debt. That way your debt is now free. But you're also acquiring assets that build in value and positive cash flow over time. You buy those assets by putting money away to have capital to take advantage of opportunities. How would you save money to take advantage of opportunities if you're spending it all on reducing debt? Anybody got a good answer for me?
No.
No.
If you focus on debt, you tend to acquire more.
Yeah, I don't care if listen, I don't care if your goal is to get in or get out of debt. You focus on debt, you're going to have debt. Got it? What you focus on expands because you're placing your energy there. So why don't you focus on building wealth? Part of building wealth is debt reduction. You with me? Yeah. Okay. So you could call this vacation fund, education fund. Are you investing back in yourself? Whatever you want. But have a breakdown of your income distribution. That way, as soon as a check comes in and it's deposited to your PLLC, you're dispersing funds immediately. Immediately. Got it? And it's really fun to transfer a massive portion of that money into your own personal savings account, not your checking account, your own personal account. That can be used for seminars, buying a flip, it doesn't matter. And there's plenty of money in there. That's a really good feeling. Listen, let me ask you a question. If you're not creating that, what are you creating? Intentionally. Anybody? Yeah, shit show, right? Like you want to build wealth, it comes through having a vision what the end result is, a plan of action, and execution. There's no shortcut. Got it? Okay, so let's move on to the business P&L. So that's over here. And by the way, guys, this is an example. This is a condensed version. What I really want you to look at is over here in column A, these expenses. This is an Excel format. You can convert it to numbers if you got a Mac, whatever the case is. Put in what your expenses are. It doesn't matter what they are. This is just an example. Mine was pretty complex, and I had different sections. I had fixed expenses versus variable. I had different marketing campaigns. Like it was very detailed. That's not necessary. You can grow that if you want, because you want to do some tracking and stuff like that. But the bottom line is, if you have this, come January 1st, all you got to do is email this and your 1099 to your CPA. And you're just about done. Much easier, right? So, first things first, you want to make sure all your expense items are correct and they're in here. But don't worry, this is subject to change. You may add things along the way, right? Realize you didn't have something in there, pick up a new marketing campaign, whatever it is. So just add it in. If you want, you can make these in alphabetical order, especially as your list grows. That way when you're looking at your bank statement and you see something, you can just quickly scroll down, because it's in alphabetical order, and find that line item expense and pop it in there. Got it? You'll save yourself some time. As complex and as many expenses as I had on a monthly basis, this entire process took me about 30 minutes. So you're not able to say you don't have 30 minutes a month to pop in your numbers. It's not that difficult. Pick a Saturday, a Sunday, while you're on an open house or your day off or whatever the case is, and just decide to get it handled. It's one small time commitment per month. So you can do it monthly, or wait till the following year, the day before it's time to file taxes, and go through all your bank accounts. That's called hell, and you're doing it to yourself by a lack of discipline. Got it? If you've been in this business more than a year, you know what I'm talking about. We've all done it, right? Okay, so here's the deal, guys. This really is just a down and dirty, simple Excel spreadsheet. You can get QuickBooks. You can go do hours upon hours upon hours on training on how to generate reports and do all kinds of cool, fancy shit. And it doesn't matter. You're in the business of building relationships to sell houses to them, right? Like, keep it simple. All right. So if you notice, clearly, there's just the months of the year, and then all of these are totaled for you through formulas. So if you have a set expense, every month you can just drag that out. You know what I mean? But don't fill it in for the year if you're not there yet, because now you're getting funky totals. Just stick with the month that you're on. Don't future forecast and that kind of thing. Okay. As you scroll down here, it's going to tell you for the total, what was your total outgo or total expenses for the month for your business. That's really good to know. We'll get into that. And again, as you go throughout the year, then you can take a look at, okay, how much did I pay on pictures? Now, I got this new vendor that charges $25 less per shoot. Well, based on how many listings I had, that could save me, right? So you can start looking at these things and ask yourself intelligent financial questions, because you know where to get the data and you can get it quickly. Yeah? Think about it. How many decisions financially have you not made because you didn't know the answer to a question you had in your mind that would help you make a decision if you should do something or not? Right? Because you just don't know where to get the data. It seems daunting. Yeah? So you just avoid it. Well, what if you were able to make better and faster financial decisions with your business because you knew where all the information was in order to make a better informed decision? You'd probably be making more decisions, which means you're paying more attention to your business. This is your business. You might want to mind it. Yeah? Okay. If we continue going down here, by the way, I kind of shrunk these cells to get it to print out on one page. You can do that or expand them. Totally editable. You guys can do whatever you want with this file. This is just to give you a starting point. If you look at gross revenue, I'm going to show you where to get that number. I'm just using an example right now. So in this case, I'm going to expand this a little bit for the sake of reading pleasure. Let's say these were all your expenses. I'd like to trade you businesses. And you earned 12 grand that month. Those are your expenses. You see the income to expense ratio? You want to start tracking that and notice patterns. Plus, if you think about it, what's the maximum income to expense ratio you want to hit? Because could you be spending too much money in your business? And the answer is absolutely yes. Okay? So it's just an indicator. If you look down here, gross income. So we basically took your gross minus your expenses. So this is more of what we would call an adjusted gross. Now, based on that, this tax is down here. By the way, you don't enter any of this. You only put in your gross revenue. So, for sake of ease, you could color code that to know that's the only thing I put information in. The rest is going to be handled. Let me give you an example. So let's just say all of this was the same for the next month. Yeah? And this month, I had one closing. It was a small one. Look what happens. It all gets handled for you. So it calculates your percentage, it tells you your adjusted gross, and it tells you how much taxes to put aside. Because if we click on that cell and look up here, we use the 25% tax bracket. But here's the thing, ladies and gentlemen. What we're doing is we're taking 25% of your adjusted gross, not your receivable gross. Does that make sense? So now you're not withholding more than necessary. That's more for you to go invest, not spend on things. Got it? Okay. So that may not seem like a lot right here, but when you start adding it up over the course of a year, you're talking thousands and thousands of dollars that you could be overpaying. And for what benefit? There's absolutely none. Does that make sense? Okay. So, any questions on profit and loss or P&L? Come on, anything at all? What should or should not be on here? So, I write off my cell phone. That's in here. I don't write off gas or maintenance in the car because you can either do gas and maintenance or mileage, not both, right? So make sure everything that's associated with your business is in here, everything.
Do you use mileage?
I do.
What do you track that?
Separate. Yeah. The best thing you could do is really have an app for that or a little notepad or something in your car. It's a giant pain in the ass. Yeah. Okay. It does. So, any questions on this, guys? At the end of the year, this number right here, your gross revenue, should match your 1099. It should also match another spreadsheet I'm going to show you. Okay? And then your tax savings account, so a separate account for that, that balance should match this at the end of the year. Oh, it's all coming together now. Which means that's how much you actually made. Follow me? Any questions so far? Is that self-explanatory? Or I'm not good? Or what's that? Yes, this is on the internet. Yeah, and all of these forms will be on the internet by the end of today. Yep. Okay.
Can I add something?
Yeah.
Something that would be wise to do if you're going to use the spreadsheet to track your expenses, which is great, is let's just say your expenses are coming out of your business bank account. At the end of the month, when you reconcile your account, you should take a look and make sure that you've got everything on here. Because you might put things on here proactively when you're doing the spending, but sometimes things show up on your bank statement that you forgot to enter here. So if you don't verify it against your bank statement, then you'll miss expenses that you could have written off if this is what you had to your CPA.
Yeah, thank you for that. So my personal process was I would take my bank statement and I would take all those figures off of that and put them into the PLC. Or the P&L, excuse me. I wouldn't fill this out expense by expense because that's just daunting and unnecessary. So once a month, at the end of the month, when the statement comes out, just sit down and pop it all in. That's about 30 minutes because you're not spending that much. Especially like when I was running the Thorstad team, like my expenses were 6 figures. That was a lot of things to go over and put in here. If you had a handful of expenses, how long is that really going to take you to add up and pop into these categories? Almost nothing, right? So a little bit of time once a month is going to save you a lot of stress and anxiety at the end of the year. Okay? All right. So let's go to the next item on the checklist, your personal budget. So this too is also on the internet, or will be for sure. So if we look at it, it's super simple, guys. Your monthly income. So you could do it from all sources. You could do this for your entire household, you know, your family, whatever. So we'll show you where to get the total and all that. So let's just say it was that other month for $12,000. There we go. And the cell's not big. Oh, it's 120. My bad. So that's projected. So you can start doing some projections and forecasting. We can talk about the value of that in a little bit. Okay. So just going on down the line. So notice there's projected and actual, right? If you put in here, let's just say, and let's say you're going to go buy a new house and your budget is $2,500, and come to find out your mortgage was $2,000. I don't know. I'm just example here. It's going to start tracking the deviance or differences. Okay. For the sake of ease, let's just say it's all the same. And what you do is, as you go down item by item, it's going to start giving you totals. Okay? So transportation, if you got multiple vehicles, different insurances, food, different types of debts you have, your taxes, investing savings. And guys, you can delete, add, whatever you want to do. There's plenty of room to alter this form. But the cool thing is, it's going to total everything for you. So all you got to do is put in your actual expenses, what they are, what categories, and how much they are. And now you're going to know exactly how much your monthly personal outgo is. So this is how much money you must earn to at least pay bills and break even. If you don't know what that number is right now, how would you feel if you did? Like to the penny. Gooder? I'd feel betterest, right? Yeah. So it feels good to know you know your numbers. It feels good to know I'm at point A, that's point B, now I know what it's going to take to get there. If I don't know where I'm at, I don't know point A, it's difficult to really buy in and believe that I can get to point B. Plus, I got no idea how or what's missing because I don't know what that gap looks like. I don't have a point A as a point of reference for a point B. You got to know these numbers. It's not difficult, and it only takes minutes. I'm just giving you the tools to plug the stuff in. But you still have to decide to sit down and do it like it's important. Because we always make time for priorities, right? Okay, cool. So this will add everything up for you. Now, when you go to your projected and actual monthly, if you look over here, so you got a $2,000 deficit. Why is this not playing along? There we go. So there's how much you spent from how much you made. The difference is a little off right now, but it's all going to calculate everything for you. You're going to know exactly how much net income is dropping to the bottom line. Here's how much I made, that's how much I spent, here's what's left over. Got it? Any questions on that? You guys are too easy today. All right, the one thing that we're not going to go over is Liberty Budget. That's really simple. Because, you know what I mean, like how many things you have on there. Rental property, vacation, maybe new car, savings account, those kinds of things, yeah? So that's pretty small and easy to create on your own, right? Yes?
Yes.
Okay, cool. All right, we went over income disbursement percentages, right? Okay, we're going to come back full circle that in a minute. Now let's talk about the sales commission tracker. So if we go to this guy right here, all right, this is the one that I've been begging people to use that you're all still in resistance to.
No, it's awesome.
Okay, so let's go over this real fast. First things first, if you look at the far left here, you see those ones, this column? Just because of formatting with cells and all of this, this is the only way I found to do it, where you've got to put a 1 in there to count that line item. If we're looking down at the very bottom for totals, you see the total sides? That's counting all of these inputs. Does that make sense? Okay. That's just the way it's got to get done. I haven't found a different way to do this. Because if we add this up, it's going to do 1 plus 2 plus 3 plus 4, and it's not going to be accurate. Okay. Cool. So all you're putting in is the close of escrow date, the address, was it a listing or a buy side, the source of the lead, so you can start tracking those things. Your sales price, the commission percentage, it's going to calculate the gross for you. You just put in your split. Did you have a TC? And then it's going to pop out your net. Got it?
Yeah.
Okay. So as you do that, it starts giving you totals. Here's your total sales volume. That's your total gross commission before split. That's how much total you've paid your TC, and that is your net income. Got it? Also, here's how much you paid toward your split. So if you got a big deal coming and you think you're almost at cap and you want to know how much of that you get to keep, here you go. Ta-da! You don't have to call Lori and it's a Saturday and you really want to know, but now you got to wait till Monday. Nope. You have all your numbers here. It even tells you your average sales price, your average commission, and your average commission percentage, because it's not 3%. That way, when you want to do forecasting, you can use accurate numbers. instead of thinking you're going to do X amount of sides at a full 3%. Like, it's just not reasonable. Got it? Okay. Any questions on this? It's that easy, ladies and gentlemen. So what I found,
Eye-opening when I started using it.
yeah, what I found in order to get me consistent at this was it was really fun to get a listing under contract or a buyer in escrow to go pop this in here as a pending. To see how much I'm making and to see these numbers grow. Like, that was my motivation. You know what I mean? So you don't have to wait till it closes. As soon as you get something in escrow, go add it on there. It starts to become fun, especially when you have multiple escrows at the same time. Are you with me? Cool. Now, here's the deal. Here's where all these forms start working together. Are you ready? So if we take this, and let's say we're in February. All we got to do, how many closings did we have in February? 2. So we go over here, and we go like this. Got it? So if you look, my bad. When you highlight these, look what happens down here. It tells you a total, right? So now you can take that number, 11, 6, 17, 30, and you're going to go to your P&L, and you're going to type in 11, 6, 17, 20, whatever it was. It already has your expenses. Now you know how much taxes to take out. Does that make sense? So every single month, you're going to fill out your P&L from your bank account. You're going to go to your sales tracker and find out what your net commission is. Pop it in there. Once you pop it in there, it's already going to exclude all of your business expenses, so you know your true net on how much taxes to withhold. Got it? Okay, so if you do that, and this is 25% of how much you actually made, when you go back and you look at your income distribution, you can start checking the math and see if this number is too high or too low. So what I do is I have my business account, my business bank account for the PLC. I have my personal checking account. I have a savings account. And then I have a tax savings account. I separate them all. So as soon as a check comes in, I'm making 4 transfers minimum. Got that? You might also start taking a look at, okay, of how much money I'm earning, how much am I actually spending? If you look here, what are those numbers? We're averaging 6.3%, right? Well, guys, how much have we been putting aside for our business? 20. So can you see then your business account is going to start growing in its balance? That's a good thing. So now when you want to do a marketing campaign that's $500 a month, you're like, ooh, can I afford it? Oh, I have $6,000 in my account. If I didn't earn another penny, that balance is going to pay for that marketing for a good while. So instead of wondering if you can afford it, you've got a balance in your account to start paying for more marketing. Or maybe your business is growing, you want to hire that assistant, but you're not comfortable with the idea of shelling out that much cash every month. Oh, wait, my PLC account has a large balance. I can afford this for a good 90 days to get my feet wet, work with my assistant, get the delegation off my plate so that I can step completely into the things in my business that I love to do that generate more revenue. Are you with me? Yeah. So you're giving yourself an opportunity to succeed by having confidence in your financial picture. You're able to make better decisions faster. Would that support you in growing quicker? So, if you're ever faced with an opportunity and you're not sure if you can afford it, here you would know instantly. In fact, there in the moment when you had the chance to make the choice, yes or no, to take advantage of the opportunity, you'd know because you look at this thing at least once a month. You'd know. Would you be more confident in your decision making? Yeah. Would you be more confident in your ability to build wealth? Cool. This is how it's done. Does that make sense? Okay, so as you have a couple months worth of tracking, then you can go back to that income distribution, check those numbers, and reallocate. What you might notice is that you really only need 30% to live off of. Congratulations. But you could knock down business to say 15%. Taxes are only 17.5. So I'm going to increase my savings to 20%. And my debt to 7.5, whatever the math comes out to be 100%. Does that make sense? You start making adjustments. Now you are running like a lean, mean machine. And you're making progress faster. Got it? Okay. So, oh, that's not on here. This is what happens when you plan a class the night before. If you go here, this debt reduction plan. Everybody has that? Did I not pull up the... That's the blank. Oh, my bad. Let me go here. No, I want... check this out. This is super important. Does anybody have debt they want to get out of? 2 of you? Cool. All right. Here's an example, and this is in your packet. These are fake numbers. Plug in your own. I just threw this together. Let's say these are a list of all your debts. Okay? Put in today's balance, the monthly payment, and the interest rate. Now, if you follow things like Susie Orman or Dave Ramsey, they call this like the debt snowball, and it's how to pay off your debt faster. My way is slightly different. I'm not saying I'm right, they're wrong, they're right, I'm wrong. I'm just saying these are different ways. I'm an investor, so I always and only look at return on investment, always. Especially when it comes to debt, because this is really how much money am I throwing away at interest, right? Okay, so here's what this has done. I've taken, just like you would if you were looking at a, okay, let me word it to you this way. Let's say this was a piece of real estate you wanted to buy, and it's going to cost you $250,000, and you get $1,750 a month, right? You want to know your return on investment. Your return on investment is 8.4%. Yeah? So the same is true with debt. Look at this monster right here. Let's say this is a, I don't know, a credit card at $5,000. Your monthly payment is $300, and that's the interest rate, right? If you take your monthly payment times 12, that is your annual return, right? So if we take that divided by the debt amount, that is our return on investment. So if you spent $5,000 to wipe out this debt, it would save you $300 a month, and that would be a 72% return on your money. So which one of these debts would you like to pay off first? That one. Now, here's where the Dave Ramsey debt snowball comes into play. As soon as you pay off this pig, guess what you're going to do? You're going to pay off the next one. Which one would you choose to be next? 36. So you're going to pay $250 a month towards it, plus the $300 a month you were paying on this debt until it's paid off. So you're pounding away $550. You're more than doubling that payment. So what you're doing is you're paying more towards principal, and you're messing up the amortization schedule. This is going to get paid off quicker, so you pay less interest. Got it? Now, if you're super disciplined, this is paid off quickly. Now you've got $550 a month to throw at what debt? This one, right? Because it's the next highest percentage. So if you were paying $315 a month plus an additional $550 a month, it's not going to take you that long to pay this puppy down. You know what I mean? That's how you're getting out of debt. And it didn't cost you any extra money. Which means then, all that other money you were saving, you can use to buy income-producing assets. Then if you wanted to, you could take the cash flow from that asset and put it towards the next debt, paying it off even quicker. So you're paying down your debt with no additional money out of your own pocket. Are you getting this? You're just reallocating spending. You're using the money that is in your pocket to go buy things that pay you money monthly to pay off your debt. So by the time this is all done, which, by the way, I don't care about having car and mortgage payments. For me, that's a fact of life. But this all down here is garbage and junk. And what if you're able to get rid of all of this in a short amount of time because of some income-producing assets you bought? When this is all gone, it's gone forever. But you still got the income from the assets. Got it? How else are you going to make this happen if you don't put it on paper and decide to get committed to building wealth? And you won't even look at your bank account and where you're spending money. So, use this and go set up a budget. What is the money you're spending? How much money? Do you know? How much money do you spend a month on gas? So that kind of stuff will take you a little while. But it's important to get this narrowed down so that you know, okay, out of that 12 grand I made this month, only 5's going to the house. Only this much is going to taxes. That means the rest gets to get invested. And now I feel like I'm going somewhere financially. You know what I mean? Cool. Any questions about any of this? No? Okay, then that's the class.